Okay, Matt, so on the back half of the show, I want to talk about this IPO of Rattler Midstream. So far is the biggest IPO of 2019. Began trading on Thursday, May 23rd under the ticker symbol RTLR. This Rattler Midstream, if you can tell from the name a little bit, they're affiliated with Diamondback Energy, which is a E&P company primarily based in the Permian. This 10,000-foot view, what does Rattler Midstream provide to investors, and what opportunities does it give with this newly public company? What are you buying?
Yeah, so a lot of these E&Ps, especially in the Permian Basin, they've had to build out a lot of the infrastructure near the wells. And so these are called gathering and processing assets. It's pipes that hook to the well, and they gather the oil directly from the well and bring it to major pipelines. And so Diamondback had been investing in these pipelines so that they're not held back by, another MLP or midstream company. It's kind of like this just-in-time inventory delivery of their infrastructure. So they've been investing money to build this out. And so Rattler is the arm that they've used to do that. And they're now trying to cash in on these assets. A lot of energy companies have done that in recent years. They'll either sell them to private equity funds or they'll do IPOs. But it's been really hard to do IPOs for a midstream. Recently, interest rates are rising, and that had kind of dampened investor enthusiasm in this. And then MLPs have had a pretty poor track record recently. But, this is the first one out of the gate. It's the biggest energy IPO of the year. There might be more to follow. So it's an interesting company.
Yeah, and so Rattler Midstream's cash flows are backed by long-term contracts with Diamondback Energy. That's their key relationship. As you mentioned, these assets were developed by Diamondback in-house and then have just been spun off with the IPO. When you look at the relationship that Rattler has with Diamondback, how attractive does that long-term relationship with those assets that Diamondback owns and the production that they're tied to, how attractive does that look at as an investment from the MLP point of view in Rattler Midstream?
It's kind of like a blessing in one sense, but it also has its own drawbacks. So Diamondback's one of the fastest growing E&Ps in the Permian Basin. So that supports all this fast-paced growth for Rattler. So you kind of have this built-in growth engine. They're going to support Diamondback. So as Diamondback drills new wells, Rattler's going to be building these gathering pipelines. That's just going to kind of fuel a lot of growth. So that's really exciting, especially since it's a Permian Basin pure play. However, if something were to happen with Diamondback, they run into trouble, that would hamper Rattler. So there's the potential for them because they're just focused on one company and one basin, that if pipeline constraints rose back in the Permian, or they couldn't drill wells, then it would slow down this growth process. So, it's a riskier play because of that. Investors would almost do better off in one sense if they were not, if they were less risk averse investors, they would be better off going for something that was more diversified.
Sure. Yeah, I saw some stats that the Rattler's earnings tripled in 2018 due to Diamondback's continued increasing volumes, and Diamondback expects to increase volumes another 29 or 30% in 2019. Again, you see earnings tripling. Do you think that is sustainable going forward? Do you think that's something where they saw this IPO going forward, coming down the line and wanted to boost earnings for that, or do you think this is a sustainable trajectory given Diamondback's continued increasing production in the Permian?
We probably won't triple as quickly in the near term because that was off a low base. However, Diamondback has a lot of growth coming down the pipeline, to use a pun. They not only they're supporting Diamondback Energy, which is growing. They're one of the fastest growing E&Ps in the Permian Basin. But in addition to that, they were given stakes in these two long-haul pipelines that are coming online. The Gray Oak pipeline, which is being developed by Phillips 66 Partners, it's a big oil pipeline that's going to move crude oil from the Permian to the Gulf Coast, where it can hit refineries and then export facilities. And then it owns a 10% stake in the Epic pipeline, which is another big pipeline that's going to kind of do the same thing. So when these come online later this year, early next year, there's going to be the huge burst of cash flow from them. And this is stable cash flow because they're backed by long-term contracts that have minimum volume commitments, which means they pay for the space whether they use it or not. And that's a little bit different from a gathering and processing, where if Diamondback were to stop drilling, the natural production of wells would kind of decline. So Diamondback's growth would would be impacted, but this is more stable. And then these pipelines can be expanded. So it gives them a little bit more diversification than just the gathering and processing business. And it should grow very quickly for several years. There's just so much oil that's going to be flowing out of the Permian Basin, especially going towards the Gulf Coast. So it's really more of a growth stock than a traditional MLP, because they're just going to be growing earnings really, really fast. And there's a couple of other companies that are kind of doing this. There's this Altus Midstream, which Apache basically did the same thing. They didn't do an IPO of it, but they combined it with a blank check company, and it gave them the funds to do all these projects. And it does the same thing. They gather and process oil and gas, and then they own all these stakes in long haul pipelines. So, but they're going to grow their earnings by, it's like 100% over the next couple of years. So again, just super, super fast paced growth, which is something you don't traditionally see in the pipeline sector.
Sure. I mean, just so much demand coming out of the Permian. Just the growth has been exploding there. One other interesting aspect I saw looking at Rattler Midstream is that they're structured as an MLP. But they still plan to pay corporate taxes rather than passing those on through to investors. I think you looked at this a little bit, Matt. Do you know what was behind this decision for Rattler Midstream, and whether that's something we'll see more of out of these MLPs going forward?
Yeah, but there's been this kind of, I guess, pushback by regular investors like myself and retail type investors, because the K1s that MLPs give you, they delay your taxes and they complicate things. So it's much more simple to have a dividend versus an MLP distribution for tax purposes to get a 1099. It just simplifies things. You can own it in an IRA. So that broadens the investor base. They can be owned by retirees. They can be owned by a lot of more institutions. They can be put into more exchange traded funds and indexes. So it just broadens the investor base and allows them to their share prices should appreciate more. They could be able to raise capital if they wanted to sell stock or units to fund different growth projects. It just gives them more flexibility. And that's why we've seen just so many MLPs either convert to corporations, or they bought out their general partners and they become corporations. And it's just this big trend in the sector, because investors just, they didn't like the MLP model. It just didn't work very well for them. There's so much dilution. They were constantly issuing new units, and the tax issues, and that's just held down valuation. So it's just an attempt to broaden the investor base and try to get the valuation of these assets more in line with what like a private equity company would pay for them.
Sure. Yeah. And then to your point, you'd mentioned earlier that we've seen, at least in recent years, MLPs not have quite as much enthusiasm from the investor base. But when we look at Rattler Midstream, this is our first IPO of a midstream company in 2018. We didn't have any in 2017. This is a positive sign for the industry to see companies start to go public again. And it seems to be some enthusiasm behind Rattler, as you mentioned, with the opportunities for growth going forward. Does this give you some optimism for, I guess, renewed enthusiasm for the MLP space going forward?
Not yet, just because there's still so many issues that they have to work on and work towards it. There's some conversions that need to happen, and they just have to prove themselves. They really disappointed income-seeking investors by, they grew and grew and grew, and then they had these bloated balance sheets and couldn't pay for their distribution. So they have to get over that hump, and it'll take some time to win back investor confidence. And I'm not sure how long it'll be. We're starting to see some of that this year. Valuations have come up a bit, but they just have to prove themselves and prove that this model is sustainable before investors will start buying MLPs again.
Sure. And then last thing on Rattler, talking about, these companies proving themselves and proving they can maintain over time. What are you going to be watching with this company? Obviously, a new IPO, just been public since late May. What are you going to be watching with this company to really decide that it's proven itself and it might be worth investment dollars going forward? What should investors be paying attention to with Rattler Midstream going forward?
Just their success in completing projects and whether or not they can fund them internally. That's been one of the big things investors want to see. MLPs used to they would issue debt and issue new units, kind of like whenever they wanted to, and the market's just like, hold on. And so now they have to do it internally. So we need to see them be able to do that and to show how the cash flows that they're throwing off is going to support the growth. And if they can't do that, then you're going to get, more dilution. It's going to be a problem. It could hold them back. So I want to see a solid operating plan from them that they can fund all this growth that they have coming, in the future.